Okay, hello people. Welcome to a new YouTube video. So today, what we're going to do is we're going to talk about the US dollar. We're going to go into some fundamentals and we're going to break it down as best as I can. So, where we're going to start is we're just going to take a look at the Dixie, the US dollar index, and we're just going to quickly look at what has been going on. So, since the start of 2024, we've basically started and held this really nice uptrend that has taken us all the way up to 105. However, we have since had this little cool off period in the last more or less 2 weeks, since the 14th of February, so roughly about 2 weeks. And we're kind of holding this little support level right about here, as you can see. We're holding this little support level, and actually just right now we're starting to test it again, just in the recent price action. So the question is, why are we beginning to see this little cool off period that we're having? Well, in my opinion, it's two things, right? Number one, or you could say three things, but number one is later rate cuts being priced in. Number two, inflation at forecasts. And number three, weaker data, right? So I should say when I say inflation, I'm referring to PCE in this case. So yeah, basically those are the three factors. I think we've seen these later rate cuts are beginning to be priced in, right? We saw this beautiful trend, but now they're beginning to be a little bit priced in. We had the uptrend and now people are kind of expecting it. So we just got a little bit of cool off instead of just continuing, right? Secondly, we saw PCE. If I go to the data, this is USD data here. If you look at PCE came in at the forecast, again, suggesting that inflation, although it's not at the target, is under control, right? And also the other thing I noted was weaker data across the board. Look at last week's data, right? Everything came in lower than forecast. Literally everything. Durable goods, way lower. Consumer confidence, quite a lot lower. Prelim GDP, unemployment claims, and ISM manufacturing PMI. All of those data points coming in lower than expected, and fueling this kind of sideways / downward price action, right? So yeah, it's quite interesting. And from here, of course, we have to ask, where's price going? Well, I remain bullish on the US dollar. And the reason I remain bullish is because overall it's stronger than its peers, right? It's likely that they're going to hold rates higher for longer, and that the data is going to continue to be stronger than other currencies such as euro. You know, obviously JPY, they're still in negative rates, and yeah, a host of other ones, right? Basically, majority of them, with the exclusion of just a couple, right? So that is basically the core reason. Now, as you can see, we're at the support level, and I do expect us to continue to retest this 105 level right over here. I do expect price to do that, but it's all going to be dependent on data. So let's have a look at what data is to come. So if we look at next week, or should I say this week, we just had ISM Services PMI come out, and it came out worse than expected, right? So that's not good. Well, I shouldn't say it's not good. It's not good for my bullish bias, right? Then we've got ADP, Fed Chair Powell testimony. We've got twice. And we've JOLTS job openings, and then NFP on Friday. So this is all pretty important data. And what I noted in my analysis, which I sent out on Twitter, is to see the resumption of the USD rally, I would like to see stronger data points across the board, a continued hawkish tone from Fred Powell, and NFP showing strong numbers, right? So basically these three data points are what we're going to want to see. If I want to see the continued trend, I'm going to need to see these 3 data points in order for the US dollar trend upwards to continue. And if we're going to want to see a break of 105, I'm going to need to see, well, I believe what we'll need is some stronger data points with, JOLTS job openings coming in better than expected. We're going to need to see some the continued hawkish tone from Powell in his testimonies. And we're going to need to see NFP coming in at least at forecast and ideally better, right? If we are to see this. So that is basically my analysis. Now, to play the opposite side, if I'm going to shift my bias, well, to shift my bias, I'm going to basically need to see the complete opposite of this, right? I'm going to see basically the opposite, the inverse, right? So that would mean weaker data points, continued weaker data points with JOLTS, etc. Fed Powell beginning to give a little bit of some dovish comments or very neutral comments, and NFP coming in weak. If we get that, there's absolutely no reason why we can't see 103 and then some further retracements. And then from there, we'll see what happens. But that is what I would want to see to play the bearish side of the market. Now, the other thing that I'm going to note before I finish this video is not this week, but next week, we have core CPI, which is again going to be very pivotal. So this is going to be something to keep a very close eye on. Obviously, that's on the 12th of March, so we have some time until then. But this is something to consider. This is going to be pivotal. Obviously, higher than expected inflation is going to bring the dollar bulls back in play, and weaker or lower CPI is going to drop the US dollar. So I do believe this will be pivotal, and of course NFP. But as for the moment, these are the conditions that I'm looking for and that I'm waiting for. So I continue to remain bullish, but these are the key data points I'm looking at. So until we see shifts against what I'm looking for, I'm just going to remain bullish, and we'll see what happens. So thanks for watching. I hope you enjoyed this video. I hope you find value in my analysis, and subscribe for more videos exactly like this. Cheerio.